Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 15th of April, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the third week of April. And as you observe, the spot gold has rallied to a recent high to almost approach the 2050 level. But then on Friday, it had a significant retracement, pulling back to almost close below the 2000 level. So that's a significant retracement here. We'll see if that's going to continue this week. And likewise, with the lower CPI figures for the US and PPI on Wednesday and Thursday, this drove the US dollar pairs lower. And then even with weaker retail sales figures on Friday, it managed to recover. And that's partly due to the Fed concern about a potential mild recession, and this spooked the stock markets, which had not a significant sell-off, but a pause and a pullback with some risk-off sentiment. So, and a potential move into safe haven currencies, and US dollar benefited on Friday. So we'll compare this with the US dollar index, and let's review the past week and take a look forward to next week, key news events. Well, last week, the US CPI was lower than expected at 5% and just slightly lower, but it was forecast was already lower for from the previous month, so it's been dipping lower from the high of just over 9%, and it's been declining since then, since the fourth quarter of last year, and from 7 down to 6 and then down to 5%. So that's good news on the inflation front, except that perhaps energy may increase the following month with the OPEC news on reduced production, reduced output, so that could drive prices back up again. But this was indeed good news for on the inflation side, and but the Fed is still trying to target the 2%. So although it's been declining, it's a short-term rally to push the US dollar lower, and the majors climbing up, including spot gold. And it was supported the following day with the much lower than expected wholesale prices on the producer price index side. So also lower than expected, in fact, below zero. So this helped the to weaken the US dollar further. Then there was also the release of the FOMC meeting minutes, and they did discuss a potential mild recession in the economy, and this was highlighted with the lower than expected US retail sales on Friday. So even though it was lower, the US dollar should continue to weaken, but overall, after the caution from the Fed, the stock market has been cautious and was not able to climb up higher, so it was slightly risk off. And then possible flight to safety with the US dollar on the Friday that could have helped drive the recovery of or a slight bounce in the US dollar on Friday. So let's see whether that's going to continue this week. And this coming week, there's flash PMIs for all the economies on Friday. Prior to that, there's the RBA release of their meeting minutes on Tuesday, where they did not increase rate as was expected. And then UK will be looking at some key indicators of their own when their jobs and CPI figures. Inflation is still running pretty high, close to 10%. And all the major economies will be reporting their flash manufacturing and services PMIs on Friday. And we'll see whether it will come in lower and forecast to see whether there's any further impact on the economies. All right, so let's take a look at the charts and for both the major pairs as well as the US dollar index. Let's begin with the spot gold. And after a dip lower and actually a gap lower from the start of the week, before retracing back the whole bullish candle of the previous week, managed to find support and recover somewhat, and then help boosted with the lower than expected CPI and PPI figures, which has been declining, and managed to hit a peak recent high before pulling back very significantly on the Friday. So now we'll see if that's going to, this bearish momentum could continue. And let's see if this coming week, there's no major key events except the Friday's flash PMI figures for all the major economies. And let's see if it's going to dip down lower and then consolidate. So it did peak at a high of 2048.76, just shy of the 2050 round figure, which I think I should just add here as well, 2050. Okay. And we could also probably move the fibs now. It was unable to reach the 162 fib extension, and it looks as if there's a slowing down of momentum, and we'll see if it's going to dip down lower, retrace lower the next couple of weeks before the next FOMC meeting in 3rd of May. So let's move this over to show the retracement from this swing high. And we'll start from this doji here, from this recent move up. And it has pulled back into the 21 fib. $19.75, that's already a support zone here. Let's move this one away, and there is a significant support in this level, but let's move this interim support to the 38 fib area together with the 1950 round figure. And key resistance is at the 2050. this support zone. Let's move this out, and this will be the critical support zone at the 50 Fib, along with this zone just above it. Now we could also extend this trend line and to see if this trend line will hold or whether it's going to be broken. So that will be a critical break to signify a more significant retracement here. 38 Fib will be the first natural target. And whether it's going to find support and consolidate for the week first. Let's also take a look on the weekly time frame. And it's a very long upper wick swing top, which potentially, yes, could signify some consolidation and a pause in the momentum here. So it may not retrace all the way back down to the 50 Fib that soon. But for now, we'll see how far it's going to dip down. Okay, so let's take a look at the US dollar index to see how that performed for last week as well. Here's the US dollar index, the DXY, and it is almost a mirror image of the euro in an inverse fashion, where tested the resistance zone on the Monday before starting to reverse and drop below the 101 support level to test the recent lows. Also, there was a recent highs for the euro, a recent low for the US dollar index, and managed to bounce back up on the Friday in an engulfing candle. So this could provide some impetus for a stronger recovery from this potential double bottom. And we'll see if it's able to climb back up to the 102. And then back up to the 62 Fib, which likely will be the 38 Fib retracement from this low. And test that resistance zone again. So that was the Wednesday and Thursday, where the CPI and PPI data just weakened the US dollar until the retail sales figure yesterday. And on the weekly time frame, it's spinning top, so it's going to be consolidation for next week until it's clear whether the recovery is on the way. Right, so this is still going to be a resistance zone up here. Key support is now back down at the swing low. It's around the 150. The resistance is still at the 103. We could also just add in the 102 as an interim resistance, and as well as the as well as the interim resistance at the 62 fib of this pullback higher, but for now let's leave the fib as it is. So this zone between 102 and the 102.40 is going to be a strong resistance zone. And since it's only a slight move out, it's pretty close still. Could leave this here just to, since we did move the fib for the euro, so correlate this as well. Resistance zone is still a strong one at the 50 fib as well. And the this will be the 38 fib, so let's just move this over. Uh, 102, I think I might leave it out. And leave this at the fib levels at the 21 fib retracement. All right. So let's see whether it can clear these fib levels and the key interim resistance levels. See how strong this resistance, this retracement is going to be, and whether it's just going to consolidate instead for the week. Okay, let's move back to the other major pairs. Let's move on to the dollar against Japanese yen. After finding support from the key 130 round figure, it has continued to recover ever so slightly and continue to recover on the Friday, yesterday, to climb back up to the resistance zone at the 50 fib area and also the daily 200 EMA. And we could also move this retracement fib here to this recent swing low. And it has reached right to the 50 fib. And interim support at the 21. And as well, there's a key support trend line. I think trend line keys support zone is between the swing low and the 130 level. Okay, this is going to be interim, so this is the next critical resistance zone, just between the 135 and the 62 fib retracement, as well as a previous swing low. So I think we can remove this one here. It's just an interim resistance. On the weekly time frame, it's a bullish close for the week, so it could signify a continuation. Oh, it's trying to target the 135. And the previous zone here goes way back. Oh, from this previous swing high. Okay, which was major resistance before, and then support, and then now resistance again. So that's a critical resistance zone. So let's see if it's going to try to target that next week. And that's only 130 pips away. So unless there's a channel forming as well from here. So that could limit the recovery. Okay. So let's see how far the US dollar is able to recover, and together with the US dollar index. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.